Hey traders, it's Leaf West. I'm going to do two videos tonight. One on the SPY trade, mainly the afternoon trade and how it's set up for me, and the second on what I was doing mainly in the morning and in the afternoon when I got involved in an open range trade for Netflix, which actually worked out really well. So I wasn't involved in the spider at all this morning. And if you look at the morning, how it unfolded, we had a gap open, which I was looking for strength in the market, but hopefully after a bit of a sideways chop at the start or a little bit of a pullback. I was not expecting a gap up, but needless to say, I don't get involved in that trade, especially when I don't see the need to jump on it, especially from a bigger time frame perspective. Again, if you were to guess at which way the market moves by buying at the open, you would have guessed wrong today. The first bar set your the high of the morning and basically sold off from there. You made sort of three big waves down to the morning low of around 11 o'clock in the morning. So after this happens, after I see what happened in the market, and I could see the five waves, I'm thinking, okay, potential low for the morning. Could be the potential low for the day. So what you did was you draw a trend line. Here is actually the chart I had in the post around, I guess it was around 1 o'clock when I did it Eastern time. So here I drew my trend line, and the market made a break of that trend line. But this is important. This is how I've had confidence in the afternoon trade working out to the north, working out to the upside. You don't know if this is the low of the morning. It could have done a corrective bounce. It could have done an A, B, C to this point, rolled over, and just continued down and made new lows. And that's why you don't try and catch a falling knife. You want to get evidence of the trade and the trend. So when the market failed to go and break the bottom of this B part of this ABC move up and actually took out the high of that corrective bounce, this is a 1 minute chart we're looking at. That's what I call a failure of the retracement trade. A retracement trade would retrace back up against the trend and then continue on with the trend. This did not do that. So this tells us that the trend going into this retracement move, which was down, has shown that it doesn't have enough strength to continue on right now, and potentially that means the strength will be shown in a price going higher going forward. So what I like to do then is to see a complete, this to me would be the first leg, because this is a 1 minute chart. So if I'm looking at a 3 minute chart, this would be leg one. Then I want a corrective move, which is leg two, and then I want the final move up, breaking this high, and the third wave of the corrective bounce on a 3 minute chart. And so that's what if we look at the next chart, that's what I was looking for here, and I was drawing. To me, I drew targets for the end of the third wave based on my first wave, which made targets of 123.17 to 123.44. We got in that point, and I thought, and where stochastics were on this chart, and when I was hitting the zone, I made a upper leg candle shooting star right off of the weighted average price for the day up to that point. That to me was a good stopping point for the corrective wave, for the upward portion of that first push. So to me, I want to see a retracement off that into the 50% to 78.6% slot area, and then that's where I want to buy. That's where your highest risk reward is, in that you get involved there. Your stop can be relatively close to where you think is the final resting spot, and then you get all upside hopefully from that point onwards. And my target was based on this first wave, and it was at 124.07. That's the lowest of my targets that I had, and I was trying to be conservative because again, the market did not look like it was going to go like gangbusters, so I always picked the lowest target of my targets. So lo and behold, what happened was, okay, we're back in the 3 minute chart. What happened was, after that was the top of that corrective move. So I had that right, had that nailed down pretty tight. And what happened was for the next 1, 2, 3, 4, 5, 6, 7, 10 candles, half an hour, the market went straight sideways, which is, it can do that. When it does that, often what happens is the market doesn't want to go down to the slot, and all it takes is a break above that, and off you go like a raped ape. Right above us was the weighted average moving price, and if you break that, and I think I noted that on tweet. I tweeted that once you got above that, if we haven't pulled back yet, we get above that level. That's, you got to get long for sure on that kind of trade. So I got involved. So the market pulled back slightly. I got involved right in here, I think, at 123.06, I think the number off the top of my head. And I bought again at 123.16. And I had my stop put at 122.60, which was just below the 61.8% retracement, and just right at the bottom of this candle, the bottom wick of this candle here. And the market did its two-legged move. That shows you the power of patience. And actually, in my macro accounts, I was patient. I had the trade set up ahead of time because I don't like to really overmanage my macro accounts. So I actually got good purchases on my macro accounts, but I had to sweat out my trading account, and that sort of did two things. One is it made the trade a lot hotter than it should have been. It came out perfectly where I was expecting it. So if you look at, you can even draw the expected target area off these waves down. Based on that first wave there, we ended up right in the target area, which was right at the redraw it. It was right at, sorry, we ended up at the 61.8% retracement, which is exactly how I drew it, and it's exactly what I was looking for and hoping for. So it's a bit, it threw me off because I had to sweat through this whole trade, and I thought, oh shit, it was going against me, and it came so close to taking me out that my mindset was not right going forward from that point. So I actually ended up taking profits at roughly 123.60, I think the number, not 123.60, sorry, what was the number? I think it was 123.60 off the top of my head. But anyways, it threw me off, so it made me mismanage the trade, and so that's a lesson for people that are looking at this or watching this video. And I know better than that, but I also know that these trades, when the market goes sideways after that kind of move, after having a big sell-off, it can refuse to go down, and away it goes. So I tried to be patient, but I wasn't smart enough about it. And so that's what happened. And the last thing I want to show you with this trade is, lo and behold, where did the price end up? We talked about the open range and how my fib levels sort of act as support and resistance. And I said that they try and go back to the opening range if they get near it. And I'll go down a 1 minute chart because that shows it pretty well. That here's the bottom of the opening range. You can see price comes up, and usually when it goes up the first time, it always fails the first time. So we poke in, we pull back. Now we're making a move back in. We test again, and it fails right away. But it's always after that. After that second test, if it had held the bottom of the range and made 2 or 3, 4 bars inside that around the price, that's a good sign to go long. When it pulls back to moving averages and makes a higher low and then starts to move back towards the opening range, that's where you have a real high confidence in price getting back into the range and then making it to the other side. And I think I tweeted when price got back in right here that it wanted to go to the other side of the trade. And sure enough, it wasn't a real big range. It was only 21 cents today, but still we shot up in a heartbeat. And again, you see what happens. You break the range, you pull back, and it refused to get away from the range, and it pulled back into the range and went below. But it ended up basically 2 cents or 1 cent off of the bottom of the morning range.